First things first, guys, hit the like, subscribe, and please share. We want to develop the channel. I want to do more for you. We need the numbers to do that. Bitcoin USD. This is what I'm going to talk to you about. This is the crypto markets. Haven't updated you in a while. Really appreciate the support. If you boost the numbers, it makes it worth our while. We can do more content more regularly for you. Okay, so overall, I've said this before, but it's worth a recap. There might be some people that are watching for the first time. Typically, the retail trader thinks the game is up. You get a bear market, you bottom out, you may have a new bull market that makes a new all-time high, you get a bit of a bear market correction, you bottom out, you make a new high, etc., in a slightly convex way. So if you're looking at it on a log scale chart, it has a mean line, something like that. That's the expectation. That's why it's largely wrong. The markets don't do what you expect. That's part of the game. It isn't a rinse and repeat exactly like before. This is not a movie with a bunch of sequels where the same heroes show up and do the same things. Actually, what happens is it's a real world. People get a bit smarter. They get a bit more burnt. They think they've seen the movie before and they behave differently in slightly different ways. So we were the guys that were one of the few bears during this period. We were deeply unpopular for it. That saw the breakdown to the 3.2 level. This is your 20k, give or take a few hundreds. This is just over 3k, and that was just under 14k as a relative high. I've said before to you that overall our suspicion is that in actual fact this bull market will not make a new high, and it will have a reversal to the downside, and that when you had this pump that got so many people excited, it's likely to fizzle and drift down, and that we haven't yet had sufficient a down leg or sufficient time going sideways. So we needed more time to have elapsed, and we probably needed more easing in the price. We expected the first kind of levels where we might have a basing out to be roughly where the key levels of significance, if you do volume by price, an immense amount of trade. So those horizontal histograms, immense amount of trade occurred during this period, and the 6,000 level was being defended, and of course it failed in the end. So there is a lot of price recognition in around these levels. We had a target of 6.8 on the inverted structure in there. I'll drop time frames, you'll see it in more detail, but overall we're getting constriction. So we think we're at first major impulse over here, that you're getting a secondary impulse that fails to make a higher high but also doesn't make a lower low. So you're starting to get some constriction, and for example 6 to 7k would represent higher than 3k. It could go to 5, could go to 4 as well, but I think you'll this is probably the zone, or we might have put in the low and we'll just gestate and go sideways and make a long boring rounded bottom. So I'm expecting constriction overall in the volatility of Bitcoin to set up a macro type structure. Whoopa, we didn't want to hit that button. Why not use the mouse next time, Francis, instead of a fat finger? You know, like those traders, fat finger event. There you go. I've just had a fat finger event. There we go. That's more like our anticipation, a major continuation pattern. So the bad news is for you is that you're still probably in the downside channel, bleeding out. You may make a lower low, you may make a double bottom and then recover. It depends, because we're not too far off what I'd consider an acceptable level, particularly with that structure that was really interesting at a place. But I think we need more time, and then it's going to get super boring, and that's the lower volatility. So some form of basing, maybe it's a bit lower, and then a weak increase, but it'll also be a difficult one to trade long, in the same way it's been fairly tough to be on the short side here, although it was the right thing broadly to bias. Overall, most retail traders will lose money during these benign, difficult spike, dip, pause, not much action, sudden pump type markets. It's Bitcoin destroying, and overall my suggestion is do very little. Hold on to your pot, because the good news will come. You just have to learn, yes, wait for it with a P, patience. It's one of the hardest things. you came here because you want to be get rich quick and make mega money and have a Ferrari trade. And now that you're being told patience, that doesn't suit you one single bit. I know. By the way, you can learn about the emotions and psychology, the kind of things that bring you to trading and what you have to overcome, the very things that brought you to trading, dopamine seeking and all variety of things. Mini series below in the links, grab it. If it's the first time you haven't watched it, you'll get a video delivered to your inbox, totally on us, no charges, no games, and you can enjoy it and get a feel for what we're about. If you like what we're about, book for a call, talk to an HVF trader. Anyway, back to the Bitcoin. So the channel overall is in place and we're trading broadly down. I'll show you the lines on that rather than with a finger draw as I'm doing now in a bit. But we did warn, so if we go to the Twitter feed, which I got called out from, many people didn't like it. I highlighted, by the way, that there was 4.5 times longs compared to the shorts across Bitfinex, BitMEX, and a variety of other exchanges that aggregated the numbers. And I also highlighted that you're on the top side of a descending channel. What could go possibly wrong for leveraged longs? A sardonic type warning for those that might have been tempted to take the view to be leveraged longs, which is a habit for the retail trader generally, especially after a spike that gives them all their pluck and bravado back. And we warn that this is likely to fizzle further lower. And that it could be difficult for you, although it won't necessarily have been an easy short. In fact, in the end, it gave us good inverted structure, but broadly, I didn't encourage participation in it, and we've since pulled down to roughly the midpoint level here. And that was exactly what we were warning. You are knocking up against this channel range where we broadly expecting an easing from that 14K, just sub 14K high. So let's have a look at that inverted call that did exist on the lower time frames in there. So I'll just give you a quick look of the chart and pattern and the targets, and also how it played out. Throw that down on Bittrex for you, and we'll drop it into the time frame a little closer, squeeze the chart up, and give you that little insight. So overall, if you understood HVF method, you might have done that inverted draw that you're seeing there. You'll see that that target has been made, and it has been made in the time frame. So it is a good performance. So you can see it here. I'll show you in the draw. That means it was a first setup in a new trend as well. So overall, that was your squeeze and continuation. You broke, you get a weak return move that is very much bear flag category. You get a proper spill, get a little bit of pushback. That was, I'll touch on this little low vol area here and here in a minute. That pushback then quickly spills, goes into another low vol period, and then you get regular little spillbacks. Another period of low volatility, and I'll refer to that as well. Then a spill, and we're starting to get buyback now. So what am I referring to about these low vol areas and then the subsequent reassertions to the downside? Generally, you should trade continuation, not reversals, guys. Continuations, not reversals. Remember that. If you take anything from me, take that. Take that, he said. Wow. Okay, let's go and hit you with the BTCUSD on the, let's go Bitfinex on this one. So I'm going to show you a little bit of fib trickery. So let's just do that. In fact, let's go Bitstamp. I've got so many lines on there. It's going to befuddle you no end. BTC. Take the C out, Francis. Let's go to Bitstamp and take the Bitcoin chart over there. So if you have a look at this, what I'm going to do is I'm going to run a Fibonacci from the top of the spike to the low. So I'm going to actually do it the other way around. Come on, let's capture that absolute low just before you had your pump spike. I'll grab that point and pull him through, and you might see why I say there was an interesting low periods of volatility for those of you that are Fibonacci fans. Let's pull it right the way through the price action, why don't we? So we get that right up there. So what have we done? Essentially at the top of the spike, I've made it the 100% level, and the beginning of the lows down here, I've made it the 0%. So you can see 0, and you can see 100. It's a full 1. So that's 0.78, so it's decimalized, but it's percentages basically. So overall, this would have been your constricting trade. That was your slap in the face. You sold a lot of that up spike back down, and then you try to hold the level. The late bulls coming in, you know, all you FOMO spike chasers, momentum chasers. That's how you did. You try to keep the market up. You said it's going to go, and of course it went the other way. So let's talk about those low vol periods. Note how you're on the 50% fib, and you get a nice little stall box, and you get a little pushback. Then you fall just through the 50%, and you're trying to hold just below it. Then you pop down the next move. Where have you landed up? That actually is, you've gone down 61.8% at that point, because that's the 38.2, and you're in spinning top territory right there on the boundary. And then you've had another spill, and when do you start to get buyback? At your 23.6% level, roughly over now. You've also fallen out the bottom of a kind of falling wedge. So that once again, you're getting constriction here. So volatility often sets you up for the impulsive move that then happens. And it can be to the downside on a falling wedge. Not all falling wedge break immediately to the upside. You could get the upside move now after a dip through. We call that option 2 of a 3 potential format of outcome on falling wedges. You'll learn that in our theory. And a whole bunch more. Book a call if if it feels like something you're interested in. Okay, so that's the fib elements. We've covered that on it. Other things I was going to show you was also the dominance of Bitcoin. So broadly speaking, the bull market was driven mainly by Bitcoin dominance. The alts still largely in a rally, in a bear trend. They haven't done enough of a move to justify it. So if we go BTC.D, and we bring up the dominance, what do you see there? Okay, we'll show you that. Well, you had 2 successive falling wedges, and you broke out of the falling wedges with quite high conviction, but then you fizzled out of that. So let's just pull some of that data in. Let's go 4 hourly to get a bit more big time frame in perspective here. So you will have seen how we've been rolling with the dominance, and this is how it's gone. So falling wedge over here. So I'll take that off, and you can see it with the pen. I'll do the pinky jaw for you. So that was a falling wedge there. Nice constriction. What do? You get the break up to the upside, as you should. That gave us an upside HVF. You'll see that constriction there. That gave us a target right there. That was the final fall. You fell down. You bounced kind of off our funnel levels over here, and had a weak rally, and then you came. Once you took out those funnel levels that we set up on the upside HVF, that is a warning that the continuation patterns to the upside are now being undone on the way back down. So it was a reversion bear. You should have reverted bear. You get a rally always after a high momentum move, a return move, and then you fizzle further. But overall, that structure was in fact setting up a new falling wedge, which of course set up the next spike in BTC dominance, which is exactly what occurred. But that then fizzled. You went convex. That's kind of that contact lens look, which means you're going to go a bit lower, and that brings us to where we are now as interpretation of what's happening. Let me take those lines out. You're starting to get a bit of basing out. In other words, what's effectively happened is you've returned all the way to the point from which you broke, and that's quite interesting, because it was the point that you broke out of 2 potential wedges. So don't forget, you broke here, that last wedge roughly there, and you broke there. So you've got 2 points where you broke to the upside after easing down, roughly there, and then again here. So those are quite strong dominance levels here and here. And what are you getting? You've gone from convex to more concave support and low volatility. So that's now showing that the alts are falling a little more now than Bitcoin, and Bitcoin's relative strength is better than it was at this point when it started to fizzle, although of course it was King Canute in that point of spike. So that probably shows 68.5 is roughly around where Bitcoin is basing out, and I think that's going to be better longer run for recovery, because Bitcoin has led since 18. So it doesn't help if the God market is weak. Everyone is expecting the alts to stand alone and run. They aren't doing it. They don't have the gravitas. You're talking about 70% of crypto land right here in the Bitcoin coin. The rest make up the 30%. So they need strong Bitcoin for recovery to take place. So it's no bad thing, but that doesn't mean Bitcoin just does, that for now, Bitcoin just goes down slower than the alts for a while. So it doesn't mean instant bull market, because dominance has stopped going down. What I would say for those of you that are not comfortable going short or long and are recognizing the kind of easing market which has many a bull spike and then a very slow going short. It's not really a good trading market. You can't get in a power major move, major breakout move and just get tucked in and sit as we like to trade. The money's made in the sitting. You could do cross crypto trading, which would be, say, we go only for the liquid ones. We're not particularly interested in the really minor coins. As I pointed out, kind of mosque and minaret pattern. It's a sort of HVF method derived similarity to head and shoulders, only it has some unique properties that are not consistent with head and shoulders. You can learn about that as well. So I call it a bit of a Batman face over there. So you get very doming, like a mosque, often with your little spire and your crescent up top there, and you get very steep with very sharp down legs. These are like minarets, where you can sing Allah Akbar and all the things that you should be singing as a virtuous Islamic citizen. And what's happened is you sell back down there, and now you've got a grind line under this, and it's a bit of a rising wedge. What happens out of rising wedges? They beget a spill and weakness, and I think that break has just occurred. So overall, I'm seeing weakness for Ethereum relative to Bitcoin. Again, that's not going to be great for the alt as a whole. Ethereum's kind of a proxy. It's one of the biggest. Ripple is another world of sick at the moment as well. So the top two outside of Bitcoin, just not likely to produce much fizzle, with Ripple below 30 cents as well. So that rising wedge, typically you're going to sell off down. So this is what I call big bull move up, then a fizzle, an attempt. You go marginally higher, which actually shows weakness, because you can't go a lot higher and you're starting from a lot higher up. You actually have this convexity, which shows real slipping down the side of the dome there. You get a weak spike, which is a smaller shoulder, and then you have a sell-off, but you hold the kind of neckline that we have here, which is in and around 18. Remember, on Ethereum, Bitcoin, we gave the huge targets. We said it's going to go from better part of 0.27s to about 0.17 at its lows, and it made that as a target previously. That all happened to the right. It's on previous YouTubes. In other words, again, we were Bitcoin dominant and suggesting you should be short Ethereum and long Bitcoin. And this is now the bull's weak attempt, coming up under the lows here, attempting to buy up, and then failing out on the downside, not even getting to the point where they can make a higher high as they did here. And that's going to exhaust. This is exhausting the longs, and that'll then set up an impulsive move. Remember, constricting volatility. When you get tightening, you later get an impulsive move. So a break, a return move, and down. And then what happens when you get to this key level over here, which is kind of a neckline overall. It's kind of a neckline in the crypto realm. We could, of course, if we opened up the lines that I've drawn on this, we could highlight that as a neckline for you. We'd grab a horizontal line, do it in pale blue, roughly at the 11.9, the 19, 0.19, that's 19% of Bitcoin. It's not exactly mega anymore, is it? At some point, I think it was around about 15. You may then have another bit of support. You might sell down to this level, have a weak bounce before making a lower stab. And also, to remind you, I made mention of those moves before. That was the inverted structure that we said, trade ETH to the downside. That was some of the draws that you had. That was part of the patterns. If I go back to the pen and draw mode, you saw your targets were made there, like that. Again, over there, sell off, return move, convexity down, targets made down here. So we made those calls, and they were on YouTube. You can check them out. And again, we're saying keep on keeping on. Yes, you have a bounce back rally after a major target is made, but that's more relief rally. The sellers have stopped selling, so there's no new selling, so you get a little bit of buyer bottom calling, buyer nibbling. But overall, this is weak, and that is probably the rising wedge we've called. So if you're uncomfortable with taking having no positions on, you want skin in the game, then rather do a cross crypto. This is not advice. I am not advisory. I'm just talking to myself. This is entertainment, and the best thing I think is actually to sit on your hands and see your way through the boredom desert and keep a watching remit. So remember, as snipers, guys, snipers do most of their watching with a naked eye and through binoculars. You only look through the scope when you're ready to pull a shot. And actually, this is no trade. The reason they have such a high hit rate, snipers, is because they rarely shoot. But when they shoot, they're damn sure. It's unlike infantrymen that during World War II fired 250,000 rounds for every kill. Snipers, it's 1.3. That is efficiency, that's accuracy, that's the sniper principle, that's what you want. But they shoot less, so they only shoot when they're pretty sure of a headshot. So overall, it's not headshot territory. The fog is down. It's not hunting territory. You shouldn't be trying to shoot a stag you can't see further than 10 foot in the mist. Get your fishing rod out and maybe go catch fish. We're having a great time fishing short the oil services area right now. And on precious metals and other markets. So if you want to learn how to trade, once again, go hit and links and book a chat. So that's kind of it for crypto for now. Overall, don't do too much is my opinion. Save your Bitcoin. You're probably likely to squander it for the big move we anticipate that will come later in that macro continuation pattern after a period of boredom and congestion and tightening, which will give you a big time frame, major squeeze, which could trigger a substantial move. So right now, easing off in the channel is most likely. Then there will be an upward bound range, but it's not going to be super sexy. Probably avoid trading full stop until we go really, really tight with lots of spinning tops, and then we get ready for a break. That could be in 2020, even approaching 2021. Be patient, my friends. Not a word you want to hear, but snipers are patient. They lie down. They sleep in a hole, they crap in the same hole, they observe, and when the shot comes, they're ready to take it. That's what you got to do. Okay, that's it from me. Like and share, please. Support the channel if you've enjoyed it. Thank you for watching. We appreciate you and we love you. We want to see your comments. Keep them coming, and play safe rather. So defense wins you championships. Attack wins a match, but in the long run, defense wins you championship. It's what you do in between your high conviction trade that undoes your performance. So stop doing. Sometimes, like they said, like Ronald Reagan used to say, stop doing, just sit there. You know, instead of don't just sit there, do something. It was don't do something, just sit there. And that's sometimes what you have to do. Keep a watching remit. Set alerts on TradingView. That's the game right now. Do no damage and stay in the game. Not the sexiest message right now. You want go, 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 trade, trade, trade. Dopamine, dopamine, please. No, no. If you want dopamine, come with us into the other markets and keep your powder dry on the crypto front. That is the final message. On balance of probabilities for us, overall, I think our fizzle call on the Bitcoin spike was largely accurate. And the bias to bear, although, as I say, we didn't take aggressive trades in this instance. Enjoy, share, help us grow the channel. I'll catch you later. Thanks for watching. Bye for now.